we're good. All right, so just letting everybody know, we got in person and we've got Zoom. If it's not obvious enough, we've got on the big screen there. We are recording the meeting. This way, though, you guys can have a copy of it at the end. So if you don't take great notes, it's okay. And also, there were some people that expressed interest in coming, but unfortunately, this day and time was not good for them. So we said we recorded. We'll probably put it into a YouTube video with a link. You can click it and rewind, press play, whatever, right? Okay, so today the topic of discussion is the Corporate Transparency Act, specifically the beneficial owner information and reporting requirements around that. I will start off by saying that this is information only. This is not a how-to session as to how you would do it, and any information we're providing here is not considered legal information. So those are the disclosures, the disclaimers. Do want to thank Joy for allowing us to host the event here at Office Evolution in Pearl River. Joy, you want to say anything about what services you have here for those who don't know?
Oh, sure. Thank you. I don't know, but private offices, co-working, day offices, meeting rooms, school mail, anything you need.
Yep. Excellent. And I've been a resident here for 2 years myself and love it. So it's great.
I've been here for 4, and my company has been here for almost 6.
Wow. Wow. Yeah, this is a great place to be and great location too. All right, so brief introductions. I guess we'll start with John McGowan. John, name, company, what you do.
Well, good afternoon, everyone. It's good to see you. My name is John McGowan. I'm an attorney. I have a law firm in New City, McGowan Law. I represent businesses, individuals, companies, and a variety of matters, litigation as well as transactional compliance issues. I work with Brian a lot at Rockland Pros, kind of talking about this Corporate Transparency Act and coming up, the deadline. A lot of people don't know about it, so we collaborated and spoke about maybe getting together and doing just this, an informational session to provide folks the information they need and talk about what's required under the law, because that's one of the most challenging things about the law. Laws are passed, people don't know, and then the compliance deadline, it comes and goes, and then next thing you know, you get a letter that you're non-compliant. You say, well, I don't even know what this is, right? So, prevention is always good. I advise a lot of clients to do such things and try to, you rather put the work and time and money into preventing things rather than having to defend them after the fact. So hopefully we can do that and provide some information so people are aware of what needs to be done. So I appreciate the opportunity, and thank you, Brian, for putting this together, and Joy for allowing us to come in and speak to everyone today.
Excellent.
So I'm Charles Carmona. I run the corporate advisory and financial advisory office here at Office Evolution, and I'm here to support John and Brian.
Yep. Charles has a lot of clients who have either have domestic entities or foreign entities, so he can speak a lot about that if it applies to anybody here. For those who don't know me, Brian Campbell. I have an accounting and consulting practice right here at Office Evolution. I think most people know me, so I'm just skip on. Well, I guess we can start wherever. Let's give you the first facts. So the Corporate Transparency Act actually was enacted in 2021. And it's not a tax thing, but it is through the U.S. Department of Treasury under a separate division. It's known as the Financial Crimes Enforcement Network, or FinCEN for short. Effective January 1st of this year, although it was enacted in 2021, as of January 1st this year, any reporting company, we'll get into what reporting companies are, they need to file a beneficial owner information report with FinCEN. Okay, so we have a agenda here for you, and we said it was going to be like understanding the reporting companies, the reporting requirements, filing process, exemptions and penalties, compliance strategies, conclusions, and we'll also leave time for questions and answers. So with regards to the understanding reporting companies they are both domestic and foreign, and the FinCEN defines them as follows. Domestic reporting companies include corporations, limited liability companies, or any other entity created by filing a document with the Secretary of State or similar. Foreign reporting companies are companies registered to do business in any U.S. state, including an Indian tribe, by filing with, again, the Secretary of State or similar. So if you registered with the New York State Department of State to file your articles of incorporation, you fall under reporting company. And it doesn't matter if you're a corporation, an LLC, or other. With regards to exemptions, there are 23 different types of exemptions. I'm not going to list all 23 of them, but they do have a document for guidance that you might want to make a note of this. It's called Small Entity Compliance Guide. Again, I'll send you this information after this event, but it's called Small Entity Compliance Guide. It can be found on the FinCEN website, and that is one of their primary documents that if you call them, they're going to refer you to. One thing to note is that the information we're providing you today is based on what it says today. FinCEN is making changes. Some of the changes are just providing additional guidance, additional updates. They have an FAQ in addition to and separate from the Small Entity Compliance Guide. So you may want to look through that if you've got questions, because they may have the answers there as well. Anything I'm missing on the reporting companies? Good? All right. So reporting requirements. This is the important part. So once you figured out that you are a reporting company, there's two parts to this, right? There's the beneficial owners and there's also the company applicants. So beneficial owners, the FinCEN defines them as one of two things. One, directly owns or controls at least 25% of the ownership interest of a reporting company, or exercises substantial control over a reporting company. I actually attended an IRS webinar on this subject at 2 o'clock yesterday, and the facilitator of that was from FinCEN, and he said that if you had a larger company, for example, where even though they may not be an owner, but you have a C-level person that's got the controlling interest of the company, CFO, CTO, CIO, whatever, CFO, they're required to be beneficial owners as well. Separate and distinct from the beneficial owner are company applicants. So I'm reading what FinCEN provided here. So company applicants. For companies created or registered on or after January 1st, 2024, information about the company applicants must also be reported. Company applicants can be up to 2 individuals. They define them as 1, the person who directly files a document to create or register the company, or 2, the individual primarily responsible for directing or controlling the filing. Any business that was created or registered prior to 2024, company applicant information is not necessary. So what information is required? For the reporting company itself, company's legal name, any trade or doing business as DBA names, the company's complete U.S. address, and then the state, tribal, or foreign jurisdiction information, like where it was registered. You also need to include the company's tax ID as well. For each beneficial owner, so that's at the company level, for each beneficial owner and for the company applicant, you'll need to submit the full legal name of the individual or individuals, dates of birth, current residential address, and a unique identifying number from an acceptable identification document. So you'll need to either upload like a driver's license or a passport. One point that came up in the IRS webinar I went to yesterday with regard to company applicants. So you can file this on your own, or you can hire somebody else to do it for you. Going back to the January 1st, if you started the business this year, the third-party service provider that files it for you, they would be listed as the company applicant. Another fun fact, I received notice from, it was a joint notice from both the AICPA and the CIMA. Both are organizations that kind of oversee accountants, and when it comes to legislation like this, they're the ones that kind of advocate for us, obtain information, and, you know, report back to us the do's and the don'ts. So they actually said that while accountants can perform this on behalf of their clients, New York State specifically prohibits us from doing so, because New York considers the filing on behalf of another company unauthorized practice of law. Anything else?
It's just lawyers in the legislature trying to do work.
That's right, that's right. Anything else?
Very familiar with New York State, very familiar with how they operate.
Yeah.
I work in insurance, and
One of
New York
50.
is a-
Yeah.
It's completely different than any other
Yep.
state.
Yep.
Yes.
The country.
They say the two states that have the most legislation of the 50 states are New York and California. I think New Jersey's a close third. So,
You can't even make a left-hand turn in Jersey.
yeah. You gotta do a jug handle in Jersey, right? All right.
If you abide by the law.
If you abide by. So the filing process itself. So how do you file? It's all done through FinCEN's website. I'll send this to you, but it's www.fincen.gov/BO, as in business owner. Through yesterday's session, I also learned that you can download a PDF document, complete that, and submit that as well. I would recommend just going through the FinCEN website, because I mean, anytime you leave the government to extract information from a document you send them, good luck with that. Very important things. Filing deadlines. So if an existing company that was created or registered before January 1st of this year, you must file effectively by December 31st of this year. So filing has to be complete by January 1st, 2025. If you look at the calendar, if you haven't done so already, TikTok. That's all I can say about that. For companies that were created or registered in 2024, they must file within 90 days after receiving notice of effective creation or registration. So if you started a business in 2024 and it was more than 90 days ago, you're already out of compliance. Companies, okay, so if you plan on creating a company or registering a company beginning January 1st of 2025, then you only have 30 days to comply. So we have anybody pre-2024, you have until the end of this year. Companies that were created during 2024, 90 days. Any company starting January 1st, 2025, 30 days to file. Any questions on that one? I'd like to make it.
Are there any exemptions?
Well, there are no extensions. That I confirmed yesterday when I sat through the IRS webinar with FinCEN. Currently, as it stands today, there are no extensions. Again, this was enacted in 2021, so for all intents and purposes, the deadlines that I just read to you, those are extensions. All intents and purposes.
Those are extensions on the extensions.
Those are extensions on the extensions on the extensions. Yes, that is.
Typical IRS.
Yeah, and this is still the government, the federal government. So even though it's not the IRS, it's FinCEN,
No.
typical government.
Yeah.
You know, and you can pick your choice of state government, you know, federal government, or even local government for that matter. A lot of people will ask, well, okay, so is this like an annual requirement, or is this something I have to do just once? So the answer is, there is no annual requirement. However, if you have any updates or corrections to the information you did with what they refer to as your initial filing, then you need to file a correction. And that correction needs to be done within 30 days. So if you have a company, you take on a partner, within 30 days of taking on that partner, you've got to do that. Questions that came up yesterday with FinCEN were, well, what if I started my company in 2024 and I closed it in 2024? You still have to file. Questions that came up yesterday also were, well, what if I created a company, you know, in the past, it's effectively been dormant, I haven't really used it, or I used it at one point and I stopped using it, but I didn't go through the formal dissolution process to close it. You have to file for those companies also. This is why it's extremely important that when you do close a business, closing the bank account does not qualify as closing it. Filing a final tax return does not qualify as closing it. You have to go back to the Department of State where you registered to go through the dissolution process. Any questions on that one? Easy, right?
I
Okay.
have a question,
Now-
Brian.
Yes, ask away, Lisa.
How are business owners being notified of this?
So
requirement?
according to the, yes, so according to the
Pending today's session.
Yes, so according to the FinCEN representative yesterday, he said that all business owners were adequately notified. Now, I don't know about you, but if I was an accountant and a business consultant, I probably wouldn't know about it myself, which is why we decided to have a session like this to bring it to people's attention. Because saying that you didn't know about it is not an excuse for not filing. They are under the firm belief that everybody already knows. I didn't
They are
receive the
wrong.
notification. I agree. So I'm going to share a fun fact with you. So I was speaking to a colleague of mine on Monday night, and we talk about a lot of stuff, and this topic happened to come up. And he's like, hold on a second. He was at his computer. He goes, let me go check something. So he went onto the FinCEN website. Based on the number of companies that they expect to file under this compliance requirement, they've received roughly about 25% of the reports they expect. So when they say that they've adequately notified all businesses, I think we can all agree that's not the case, but at least you know now. And it's better to know before the deadline than after the deadline.
And the site seems to be working.
And the site now seems to work. They were having
Crashed, right?
They were having some trouble. They were having some trouble with the site. I was going to save this for later, but no, please. This is open forum. So one of the things that I would recommend, again, we're giving you information based on what's available to us today. By the end of this session, it could change. By the end of the year, it could change. So this is what's available today. So as of today, you know what the deadlines are. Given that they get high volume, I mean, listen, the IRS e-file system goes down, U.S., government sites go down. If everybody waits until the last minute, expect there to be a problem. So my recommendation would be just do it and get it done, because if you wait till the last minute and their site goes down, I don't know if that qualifies for additional time. I'm sure it will, but their position is going to be, look, this has been around since 2021. So you've had ample time to do it. The fact that you waited to the last minute to do your homework doesn't disqualify you from meeting the deadlines. But who knows? That's at their discretion. And they can choose to do what they want. Collect your fees or let you go. The choice is theirs in a vacuum. So regarding exemptions and penalties, again, there are 23 different types of entities that qualify for exemption. I'm not going to go through them. Even if I did go through them, there's always caveats. So one of the questions that came up yesterday is, well, I actually own a not-for-profit corporation. Is that, entity, which is a reporting entity, does that qualify for an exemption? And the answer is, it depends. And then the FinCEN representative referred everyone back to the guide and the FAQs. So apparently some not-for-profits will have to file and some will not. Well, you'll have to look into the details to figure out whether or not you qualify or not. I believe the FinCEN website does have like a questionnaire that if you go through it and just answer the questions, they'll tell you whether or not you're, required to file. But most businesses will wind up having to file anyway. So let's talk about the fun stuff, penalties. I'm taking this right out of FinCEN, straight off their website. The CTA provides civil penalties in the amount of $500 for each day a violation continues or has not been remediated.
Whoa.
Criminal penalties are a fine of not more than $250,000, that would be $250,000, or imprisonment for not more than 5 years, or you may be subject to both. The CTA also provides for enhanced criminal penalties, including fines up to $500,000, imprisonment of not more than 10 years, or both. They go on to say, if a person commits a violation while violating another law of the United States or as part of a pattern of illegal activity involving more than $100,000 over a 12-month period, violating applicable requirements could also lead FinCEN to suspend and bar the requester from accessing the BOI system. So you won't be able to file and you won't be able to make any updates. So those are the penalties. Anything to add about the penalties?
No.
Yeah, can I throw my 2 cents in there? So I think that just kind of big picture, 30,000-foot view, I think this is a trend that our government is going to continue both at the state and federal level, trying to find transparency in businesses. New York State passed like an LLC requirement this year, right, to identify the owners, and that's always been one of the benefits of creating a corporate entity. You absorb tax liability, absorb other types of liability, and your personal information isn't necessarily out there, right? You form a business, my the law practice is a little different. You have to use your actual name, but you 123 LLC, DBA is Joe's Bagels, right? Maybe your name's Frank. Your name's not even Joe, right? There's some protection there, right? It's an entity that absorbs liability, but also, you don't have to put your personal details out there. The law is changing because of the concern a lot of policy and lawmakers have about LLCs being used for nefarious things, right? And there's some which I think there's debate about that, whether that's something our government should be doing or not, right? That's a whole separate thing. But I think this is a trend, and I think this is aimed at doing just that, right? Provide transparency so the government has access to who the actual owners are and beneficial recipients of a business, right? To try to prevent fraud and other types of nefarious conduct ongoing. When I read the fine, I'm a former prosecutor. I was a DA in the Bronx here in Rockland County, and I read this and I went, you're out of your mind, right? $500 a day. But I always advise clients, I don't want to test this.
Right.
I don't want to find out. Now, do we really think the feds are going to find, a small business like my own, right, because I'm subject to this, or like, even larger LLCs or larger corporations, maybe, it's been established for a long time, they're going to now start finding, I don't know, but I don't want to find out. So I advise my clients, let's just get this thing done, because you'd rather just do it, have it filed, and then again, as long as there's no change in the ownership structure or the beneficial owners, then you're done. You don't have to worry about it. What I see this a lot of is this might be like a tack-on offense, right? If there's some other conduct being done, this is on the books, and it even says enhanced penalties, other violations of law. So hopefully nobody is involved in the business or knows anybody in the business of, committing other crimes through a corporate entity. But and I say that kiddingly. But I think that's really what this is going to be used for in practical application. That being said, I mess with it. So I've been advising my clients, let's just get this thing filed, get it done. You don't want to test this out, but those are just my opinion, my 2 cents about, kind of because when you first read this, it's a little jarring, but I think that's maybe the point of it, to get people to comply.
Yeah, I think I mean, you're spot on. I mean, I think the fines and the penalties are really a scare tactic to get people to do it. And unlike a lot of other things that the government forces us to do, I like to call these kinds of things corporate shenanigans, right? They're having us do things, you know, for the sake of doing things. I mean, here they really do have a purpose, and it's really to, you know, provide transparency, hence Corporate Transparency Act, but they're really looking for, not us, they're looking for people that are committing fraud. And a lot of, as John was saying, like LLCs, you've got bad actors. So they're looking for people from inside and or outside the United States who are funding these LLCs for terrorist activities. Hence, it's the financial crimes group of the federal government.
Sorry, John, something also is very important, that if you have beneficial owners that are not U.S. citizens, they also have to comply with the law, so.
Yeah.
And
So-
if they don't reside in the U.S., they still have to provide all their information.
Yeah, so if you do business with the U.S., but you live abroad, living abroad does not preclude you from filing. Very good point. So here are some compliance strategies that we kind of outlined here. To ensure compliance with CTA, 1, determine if your company is even a reporting company required to file. And then part B of that is determine, you know, if your company qualifies for the exemption. The second, let's say you are a reporting company. Second would be identify your beneficial owners and any company applicants if applicable. Third, gather the required information for reporting, which I previously mentioned, and again, I'll send this to you guys too in summary form so you have it. It says mark your calendar for the appropriate filing deadline. You've got them here so you know. End of the year for everyone for sure, and for anybody in 2024, you know, you may already be delinquent. If you are, just file it now and hopefully you escape by. 5, file your report through the FinCEN secure online system, and those are the main things. Again, it's going back to resources that can be available to you to help with compliance. I mentioned the small entity compliance guide. They also have separately frequently asked questions, which they constantly update. So I think in October they updated it again. And then my understanding is they also have informational videos and other materials on the FinCEN website. So I can't tell you how many times in the Q&A section in yesterday's IRS webinar with FinCEN, I can't tell you how many times questions came up where they referred to these 3 things and didn't really answer the question. So that is pretty much the conclusion. Again, I'm going to reiterate, you can do it yourself, or you could have a third party do it for you. There is no filing fee. Yeah, and just make sure you meet the deadlines. So I know it was open forum, we were, you know, asking questions and answering questions throughout, but does anybody have any questions? All right. I jotted down some of the questions that were asked yesterday that may or may not be applicable. I think I went over some of these, like if you opened and closed a business in 24, yes, you're still required to comply. If you had a business that was open before 2024, but you didn't formally dissolve it, it still needs to file. Here's another point too. So when let's suppose you dissolve your business, do you have to do anything? And the answer is yes. You will have to go through the update process. And when you go through the update process, one of the options that's available, I think there's 4 options available. One of the options is newly exempt. So you would select that option and let them know that the reason why you're newly exempt is because you dissolved the business. So kind of like when people close their bank accounts, they're like, my business is closed. It's not really closed. In FinCEN, in the BOI database, your business is still going to be opened until you tell them that it's not. So you'll have to go through that process. We did talk about some of the entities such as LLCs and corporations that need to comply. Somebody asked, well, what about disregarded entities such as individuals who own business that file as, for tax purposes, as sole proprietors? It said most may not have to file that, but some may. So again, deferring back to the guidance from FinCEN, you've got to figure out whether, if you're a sole proprietor, if you need to comply with this. So you could be running a business, operating under your social security number, you didn't register with the state, you didn't get an EIN number, employer identification number through the IRS, and you may still need to comply, even as a disregarded entity. So those are kind of like the highlights that we kind of uncovered and thought would be applicable for you guys. So hopefully that was helpful for everybody. So John did say he's an attorney. He does get this done for his clients. So he would be considered like a third-party service provider that can do it. So if you have any questions or you want somebody to do it so you don't get it wrong, I did have somebody, a client of mine that did it, and they were like, oh, I did it, it wasn't too bad. And I just asked a simple question. So when you filed your report, how many owners did you put? He goes, 1. I go, what about your wife? And he goes, oops. So he had to go back and update. So, yeah, John's law firm will make sure that we get, he collects enough information to be able to make sure that initial filing is correct and that you could avoid some of the, things that may otherwise be overlooked.
Because it is a pretty straightforward thing, but you have to get it right. You have to answer all the questions correctly. And sometimes somebody's like, oh, I'm just going to do it. It's free. Let me just, get it done. And then you forget something. Then you're going to go back and you got to update and go through that process and amend and all that kind of stuff. So it is helpful to have somebody else to kind of just make sure and answer questions. And that's what I usually do for my clients. I provide checklists and things like that, just to make sure we don't miss anything and collect the universe of information. So.
Because remember, if you do make a mistake, you have 30 days to fix it. So if you realize you made the mistake 31 days or more, those $500 fines, they're in effect.
So if you're not doing any other crime.
My quick
All right, so I got a
question.
question.
So is there a fee for your services? And
Take it down, Mike.
can you share with us how you structure that?
Sure. So it's basically, it's a flat fee, and I'll give you my business card, and I can, if somebody was interested, I'll send you a proposal. But yeah, it's a flat fee, and it covers the filing and, the collection of information and putting everything together, and, ideally a one-time thing, right? Pay the fee, we get it done, and that's it.
And we have to do this annually now, right?
No, you don't have to do it annually.
One time.
Unless there's a change in ownership or other qualifying changes
Okay.
that require an update, but it's a one-time thing, get it done, that's it.
Yep.
So if you change your address, your phone number, that's an update.
Yeah, if you
We
move.
add an owner, or an owner leaves,
I'm just thinking about if I go to you the first time, is this something I'm gonna incur over years? Or is it a one-time thing that I can manage it myself?
you got more businesses, and you got, changes and things
Yeah.
like that, so every
Okay.
new entity would require it, within a shorter time period. So this is probably the most time for any existing businesses before January 1, 2024,
Yeah.
right? We've got, 6 weeks till the end of the year. This is probably the most amount of time that anyone will have if they start a new business, because then it's the time truncates substantially.
Got it.
Yeah, and if you do, start getting closer to the end, you're like, oh my God, I just don't want to deal with this, let me give it to somebody else to do. Keep in mind that whoever's doing it for you, whether it be McGowan Law or somebody else, they may not have the bandwidth. And a lot of people take off between Christmas and New Year's, myself included, where, that's why it's always best to get done sooner than later.
Like, and I've advised clients, I've had some that have responded and some who haven't, so I have, chase down some of them to remind them, let's just get this done, because, for a relatively straightforward process, the downside is just, I don't think anyone's getting thrown in jail for this, I hope, but, I don't like reading that, what those penalties are, so it's more the financial. If they decide, feds want to say, let's go make some money, we put this out there, right, ignorance of the law is
No excuse.
really never ever excused, which is unfortunate, because these laws get passed, and oh, we put it on our website, or maybe there was a news article, maybe there was a headline scrolling on the news one morning that you didn't see. However they put it out, it's generally online and it's other things, but there has not been a ton of discussion about this in the professional community. I've seen some law firms, I've seen other accounting practices, put some misses out there, but it really has not been well publicized. So that's why we're like, you know what, let's do this, let's just make people aware. And it's, you know, if it's something you can do on your own, just do it. You know, it's more important to get it done than the deadline passes and you're scrambling a bit.
Yep, 100%. And Dominic had a
Okay.
question. Dominic?
Yeah, so did I hear you say if you got multiple businesses or multiple LLCs, you gotta file one for each company?
That is
Yeah.
correct.
Okay, and what if your company went out of business in 22 or got dissolved or closed in 22 and this was already in effect? Are you still required to file one for that one out of business?
That's a good question.
Is it, you're talking about something that's fully dissolved, that's been wound down and or is it still open or
No,
anything filed with the state or?
example given, I had a real estate LLC with a partner that we closed last year or the year before. And you know, am I required now to file one of these things for a business that we closed?
Yeah,
Yeah.
we'll have to go back to the guidance on that one, because again, this was enacted in 2021. So again, it was enacted in 2021, and they've made changes to it since then. So you'd have to go back to the guide to see what it says about, hey, what if I closed my business between 2021 and 2023? Do I have a filing requirement with a deadline for 2024? That's probably one of the questions and the frequently asked questions, but I mean, they have hundreds of questions like that. So that's a good question. It's probably located on the site.
Yeah, I would say based on what you said, the facts you presented, likely, I would imagine yes. Yeah. Will be the answer, but now looking at specifically what was filed and you know, some more facts, I would probably better say yes.
Yeah.
And in doubt, file.
Yeah.
Yeah, that's the other thing. Especially if you're doing it yourself, what's the downside? Just file. Then you're in compliance.
Yeah. And when you file it, your initial filing can say that you're newly exempt.
Right.
So you can make your first filing your last filing. Good question, Dominic. Anyone else? All right. Not too bad. So, yeah, that's pretty much all we had. Good luck. It's really not hard, but at least now you know. And I had taken for the online registrants how many people actually knew about this prior to, and I think the options to select were I knew nothing about it, I knew something about it, or I knew a lot about it. I don't think there were too many people that said they knew a lot about it. So that's kind of why, that justified why we had this session to begin with. So, again, thank you all for attending. Hopefully you found it useful. Again, thank you to Joy for allowing us to use this space. We certainly appreciate it.
I have my card if anyone